So the 2021 budget has been announced by the government, and one of the biggest things in there was the 5% deposit. And what I want to cover in this video is, should you take advantage of it? What are the pitfalls? What you should look out for? And ultimately, is it full steams ahead and the impact to you and the economy moving forward? Hi, my name's Jamie York. I've been investing in property for the better part of a decade now. So if that interests you, make sure to hit the subscribe button and the notification bell. And hey, if this short video really adds value to you and you want to help more people just like you, make sure to hit that like button. It really does help reach more people and helps me out with the YouTube algorithm. So let's jump straight in. So my overall sentiment of this is, should you do it? Yes. Like, why would you not take advantage of more money? That's pretty obvious, but I really want to break down some things that actually is more of an impact to you. So there's a lot of things to the economy that's going to happen. It's going to artificially inflate prices. So is it really helping you? No, you probably end up overpaying for a property if you get too emotional about it. Is it going to help the economy long term? No, I don't, but as an individual, it could have a dramatic impact to you. So let me just break down exactly what it is before we get started. So normally when you are buying a residential property, and I think it's important to get that, yes, this is a property investment channel, but a lot of people are looking to buy their first residential property. It doesn't have to be for first-time buyers, it's just a residential property. What normally happens is, let's say it is a £200,000 property. Normally you would put down a 10% deposit, okay, which is obviously equal to £20,000, a fairly significant sum of money for most individuals, I think you would agree. On top of that, you've got all of your other costs. Now, what would happen is a mortgage lender would lend you 90% of that, i.e. £180,000, and everyone's happy moving forward. Yay! The problem is, when the economy is like this, people aren't looking to buy property, a lot of people aren't. They're looking for protection of their money and building it in. So what's happening now is the government is saying, hey, if you are buying a residential property, and I know this is investment, but I've had a few requests on this, all you need to put down is a 5% deposit. Quite like that, Blue. So what happens on a 5% deposit is the same £200,000 house, you now only need £10,000 deposit. Okay, therefore they will lend £190,000. Pretty cool, right? Yes, kind of. But as I said, the downsides of that is the increase in prices. If people have less friction to buying a property, i.e. deposit, more people are going to buy a property, therefore increasing the property prices. Definitely something to take account of if you get a bit emotional like me. I'm definitely an emotional buyer, but when it comes to property, I am very objective, okay? And when it comes to your home, you're definitely less objective. Even if you are a numbers, a figures guy and gal, you want to be thinking about the impacts of that increased price, because if you end up paying $220,000, yes, you've saved putting in 10 grand or 11 grand at that point, but you're paying 20 grand over the odds, so you are not particularly a shrewd investor at this moment in time. Just something to take account of with your human behavior. The next thing we want to take account of is the rates of this property. Let me just move this up slightly. So rates. So you can get some pretty cool mortgage rates. The problem is pretty much all of the good residential mortgages are at 10% plus deposits, or at or less than 90% loan to value. What this means is, even though they are guaranteeing, the government, and I'll get to that in a moment of how it's working, because you are only putting down 5% deposit, expect to pay a little bit more. And you need to think about this in terms of the impact. If you've got a £200,000 property, every 1%, which is 190,000, obviously the loan to value. So if you've got a £200,000 property, 1% of that over a year is actually quite a big impact. And we are talking about a 1% difference. And this is another thing you need to factor in. Let's say you've got a 5-year fixed, which again might be a logical thing right now. I'm not a financial advisor, so can't advise you on that, but it may be logical getting a 5-year fix because of the low rates right now. Let's say there is a 1% difference in costs of this. Well, if you've got 1% difference, let's take off 10%, let's take off the other, taking off those 2 zeros, we are at 1,900 per year of interest, okay? Additional interest on top. You still with me? Yeah. So over 5 years, that's the equivalent of 9,500. Hold on a second. That extra money, we've just put in pretty much 10 grand. The only difference is this 9,500 isn't a deposit where your money is still there. You've just lost it paying somebody else interest. So unless that 10 grand in your account has made 20% a year, because remember, that's 190 for your 10 grand that you're leaving in your bank right now, assuming you have it. Unless you are making 20% a year, which is 2k a year, to get back that 9.5 grand, it is not a worthwhile investment for you from the off. So my first recommendation, not financial advice, just my opinion, is it's already not looking like a great idea if you've got the money sat there to invest in this deposit anyway. The next thing I want to talk about is the government rights with this. So whenever there is government stimulus, you always want to look at the small print. So if you think about the Help to Buy scheme, for example, or people that live in council houses, my mum's one who bought the council house to get a discount on it based on number of years. If the government is giving support, the government is going to get something back for that risk. And one of them in Help to Buy, and the small print hasn't come out at the time of filming this, is you need to live in that property for a minimum of 5 years. So my mum's house, council house, lived in council houses all her life as a renter. She's finally bought this one, which is amazing, but she has to live in it for 5 years. If not, the government will take a portion of that discount back if she sells the property within 5 years. Okay, and the Help to Buy scheme had something similar, that if you haven't paid back that original money that they are guaranteeing, then they will take a cut of that. So I don't know what it will be, but you have to think, if the government is giving you stimulus for free, which essentially they're putting a guarantee on something, then they are going to do that. So a lot of people go, well, what is it they're actually guaranteeing? Well, what they're saying is they will guarantee 95% of the exposure, additional exposure. What that means is, if there's a £200,000 property, normally what would happen is the government, that they will give you a certain amount of lending and risk, okay? The government is saying, well, look, the first 80%, the risk is on you, Mr., Mrs. Lender, okay? So for the first 160,000 of risk, say you don't pay and they need to repossess you, they're saying that's your problem, okay? If you sell it for 150 grand, that 10 grand you've lost is on you. Then you've got your risk, which is the 5%, which in this case is 10,000, which leaves 15%, which is 30,000. What the government is saying is, we will cover that risk up to 95%, okay? So 5% off of that is going to be 1,500. So therefore, 28,500, which is 95% of 30,000. The government is saying to the lender, if they default on this, we'll cover you 28,500 if you lose that money. Okay, they are taking a risk, and a fairly substantial one, on you, okay? So just look at the small print, because the government doesn't do any favors at all, which I'm not saying is good or bad, by the way, but there are no free lunches here in our country ever. Okay, there is always somebody paying for it. And if they're taking risk here, you're taking risk here. Make sure you look on the government rights when the policies come out of this, and it will be in the next week or two. Make sure you're looking at it and getting a deep understanding of what it is they will be expecting of you. More than likely, it will just be a time period that you can't just sell on the property and things like that, or default rates and things like that. But definitely something to take account of. The next one is the logic of it. The bit that really gets me is when they're going, yeah, it's up to 600,000. This is what I just feel is a really misleading sort of thing to be doing. So it's going out there, yeah, it's even for people in London up to 600,000. First of all, if you need a 5% deposit in the first place, don't buy a £600,000 property. That's absolutely ridiculous, right? If you need 30 grand and that's all you can scrape together, the other thing is that means there is 570,000 that you need to lend. If we think about the 4 times multiplier that is going to be lent out on that, that means that you are going to have 142,500. Yes, maybe 142,500 in order to hit that. Have I done that right? 4, 5, 6, I think, yes. Bosh. 142,500. If you've got a joint salary household income of 142,000 and you haven't figured out how to save 30 grand, don't buy a property. You honestly, you have not learned to manage money effectively. And I'm sorry to come across like that, but seriously, I've got team members earning a fraction of that have managed to build up bigger deposits than that. Now, I understand if you live in London, expenses are a bit higher, but seriously, 142 grand in order to be able to buy a 600 grand property, if you haven't managed to save 30k, you are not financially mature enough right now. And that's fine, by the way. I used to be a financial screw up, but learn how to manage money effectively, which brings me on to my last point, okay? That actually there's something to be said about saving money for a deposit. The person you become to save a 10% deposit for a house is a really proud moment, okay? And it really is quite powerful, and it does take time to do it. It takes time. So honestly, my advice would be for a lot of you, if you are really reliant and scraping together that 5%, maybe owning a property is just not right for you right now, okay? And I think that's really worth considering because the financial benefits are there. And by the way, I would 100% be taking advantage of it. But that's because my financial management is there. I could put in a lot more, but I know I can make that money work incredibly hard for me elsewhere. But hey, if it means another 1% a year on that, then I need to make 20% on that other money that's going in. Think about that logically, because it's bloody incredible when you look at it that way. But also, if I'm scraping together to get a deposit, I know that I would not be financially disciplined enough and respect the fact that I'm not going to have the financial viability to afford this. And let's face it, the banks aren't well known for security, especially in times like this, okay? Go back to the subprime mortgages. If they're backed by the government, they've got relatively low risk. They are just naturally going to be a bit more lenient on that. So I think there's a lot of pride and something to be proud about building up this deposit. So I would encourage a lot of you just to think from a financial management point of view and build up your discipline to build up that deposit before going all in and buying a property. But if you are financially secure and stable and you want to take advantage of this added leverage, I'd probably say for properties below 350,000 makes perfect sense. Anything above that, you honestly need to question yourself. If you're not able to build up a 10% deposit with the earnings that you would need to do that, something has gone seriously wrong, okay? So hopefully that's added a load of value, and ultimately, yes, I'd go all in from a selfish point of view, but if you struggle with managing your finances, don't give yourself a mortgage liability that if you screw up can have a massive impact on you. Instead, learn how to manage your money effectively and then look into investing that money into a property. Hopefully that has added a load of value. If this is of interest and it's helped you out, make sure to hit that like button. It really does help help me reach more people just like you. And ultimately, that's what this channel is about. I want to help as many people as possible. Let me know if I missed anything, or indeed your thoughts about your personal situation in the comments below. I'll make sure to reply to as many as I can. And hey, if you want to have a more direct one-to-one dialogue, hit me up on Instagram. It's Jamie York Aspire. Make sure to message me with YouTube at the beginning so I know, one, where you've come from, and I make sure to reply to every single personal message that I get from my YouTube channel. And if you're new to this channel and you want to get a load more value, make sure to hit the subscribe button and the notification bell. I post on Mondays, Wednesdays, and Fridays, and I'll see you in the next video.